Happy Friday, team. Hope all is well. I just wanted to share something with you. This week, or yesterday, technically, the Fed met in Jackson, Wyoming, which is why my background's the Grand Tetons. But they basically came out and said that they are taking off the handcuffs for inflation. So what does that mean for us in the housing market and mortgages, things like that? Well, since Ben Bernanke was the chair of the Fed, inflation's been at 2% for a cap or a target, I should say, and the Fed would always fight it. If it got too hot, they'd fight it. Well, yesterday they said basically that doesn't matter. They're going to let inflation run to an average of 2%. So that means today's inflation, which is 1.1, they can let inflation run to potentially as high as 3% because the average would be the 2% that they're looking for. And again, over what time period, who knows? It's pretty vague. The reason why they're doing that is to allow them, the Fed, to basically stimulate whatever they need to stimulate, whether it be the economy or rates or anything else of that matter. They want to be able to print money, do what they want with it, which is cool. The problem is that's scary to mortgages. It's scary to bonds, because if you're investing in something, you expect this return to come to you over the course of time, whether it's 30 years or whatever it may be. You expect some sort of return on your investment. Well, inflation comes around, and when it rears its ugly head, that ultimately cuts into your profits. So here's an example of kind of what and how the housing market reacted to it. So remember, green is good, means lower, better rates. We got smacked around a while back, about 2-3 weeks ago in rates, and we've kind of been trading in this pattern right here. And you can see yesterday when the Fed made that announcement, you had a bad day, which is fine because fortunately we're still hanging above this 50-day moving average. However, if we slip below this coming into next week, you can find that rates may drift higher because the next hard floor of support's not till the 100-day moving average. So rates have gone up over the last, call it 2 weeks, give or take, 2 or 3 weeks. But again, if inflation does continue, if the numbers become hotter and hotter, because think about this, if the market goes back, if the economy starts humming and people start trying to order things and companies are on back order because maybe they just didn't have enough of the supply to meet the demand, prices go up. That's inflationary. So when that happens, again, our rates could get punched. So the good times are here, and make hay while the sun's shining. Sell as many homes as you can. Rates are good. Get your buyers in. But just realize that if at any moment the Fed stops buying mortgage-backed securities, or if inflation comes around, you can see our rates pop up pretty good. So get your folks into homes. Call us if you have any questions. We'll be around this weekend if you need us for any reason. Happy to pre-qual or just answer basic questions, whatever it may be. And we appreciate you as always. Have a great day.